Hello, everyone, and welcome to Investing 101. I'm Richard Roberts, and I'll be your guide through this presentation. This is really a beginner's level of information. I'm going to go over some key terms that you might have heard or things that you might not know anything about, but this is kind of an intro based, and something that you can take back to your financial advisor or your stockbroker and kind of sit down and talk into more detail with them as you're trying to figure out where you want to invest your money and what will give you the best return for the money that you're investing. So I'm gonna open up here with a little humor. And two little boys, Jack and Tom, were sitting in the park talking. "What kind of work does your daddy do?" Jack asked. "My daddy's a teacher," Tom replied. "What does your daddy do?" Jack says, "He's a stockbroker." Tom says, "Honest?" "No, just the regular kind," Jack said. So kind of playing on that Wolf of Wall Street where financial advisors aren't, or stockbrokers are not very honest people. They are kind of con artists, I guess. Don't get me wrong, Wolf of Wall Street is a great movie, but it doesn't tell the exact story of how financial advisors and stockbrokers actually are. Most of them are very honest people and enjoy what they're doing, and they're really looking for the best for their clients. Little humor there. I'll end with a little bit of humor too as we go along, because this gets pretty tedious and a little bit boring at times. So bear with me. Let's get through it, and hopefully it makes you a little bit smarter at the end of this. So to start, we're going to talk about a bear market. A bear market is trading talk for the stock market being in a downward trend or a period of falling stock prices. If the stock plummets, it's very bearish. So this is showing total market capitalization since January 2018, and it goes to July of 2018. So you can see on the chart that it's a gradual decline, and that's kind of giving the idea of what a bear market is. And you can see that it kind of goes down and spikes a little bit, goes back down, and it just keeps slowly going down further and further and further. On the opposite side of that, we have bull market. So bull market is when the stock market as a whole is in a prolonged period of increasing stock prices. So this is showing from 2009 to 2018, the Dow quadruples during this time, and they're calling it during the bull run. So as you can see, it's got a gradual increase every year, dipping down a little bit here and there as it goes, but it ends up skyrocketing through those 9 years. So that's a very positive look, very exciting for an investor who's got his money tied in. So that's kind of like buying low, and then it gets to that high point. It's a pretty good rush, pretty good return on that. So some other key terms, you got Bourse. You may not have heard of Bourse. It's kind of just a different type of deal, but technically it is just another name for the stock market. And where that originates from is wealthy men used to gather at their house or wherever and trade their shares. But when you hear it in today's conversations, it's usually either refers to the Paris Stock Exchange or to a non-U.S. stock exchange. So it's more international, not United States. Then we have dividend. Dividend's kind of one of those things, and I would talk to your financial advisor about the opportunities that a dividend gives you the pros and cons of a dividend. But a dividend is a portion of the company's earnings that is paid to the shareholders or people that own the company's stock. And it's usually paid on a quarterly or annual basis. So when the company gets its earning reports, you'll get a little percentage off of those. But not all companies pay dividends. So, like I said, it'd be something to look at if it's a good thing to invest in a company that does hand out dividends, or if it's not, and that's something your financial advisor can give you more details about. So, what is an initial public offering? So, or an IPO? There's been a lot of companies that are kind of starting to be public and going public and being out there for investors to kind of see to invest in. And what an IPO is, it's the first sale or offering of a stock by a company to the public. It happens when a company decides to go public rather than remain solely owned by private or inside investors. So Facebook was for well, the majority of its time a privately held company. Mark Zuckerberg would be the owner, and he's the one who got everything, well, paid for everything up front, got it to where it's at, and has grown it to the point where he can start offering it out to the public. And he did that 2 years ago, 3 years ago, somewhere around there. Facebook is it's one of those investments it's a tech investment, and those can be really good or they can be really bad. There's a lot of indecisiveness when it comes to those, and Amazon's another one. Amazon's skyrocketed and is through the roof right now. That's another tech company. You got Netflix and Apple and those type Google. Those types of companies are all fall in the same line. And the tech stocks are still very immature, very new to the stock market. And the last but not least, we have volatility. This is something that comes up in every one of the presentations that I've been a part of. A lot of things that at the end when we ask, what are some of the things you guys are worried about? And volatility is always brought up at the end of our presentation. So what volatility is, it's the price movements of a stock or the stock market as a whole. Highly volatile stocks are those with extreme daily up and down movements in a wide intraday trading ranges. This is often common with stocks that are thinly traded or have low trading volumes. So this is definitely a term I would talk with your stockbroker or your financial advisor to get a little bit more details on what you think or what volatility is and how they would deal with stocks that are more volatile than others. Closing, I had a couple more jokes to end the night, and then I can let you guys enjoy your time, and you guys can visit with each other or visit with your financial advisor that's here. If they're at your table with you, go ahead and visit with them. But so what's the difference between a pigeon and a stockbroker? The pigeon can still make a deposit on a BMW. Little income joke there. And then a stockbroker was in the hospital. When the nurse took his temperature, he asked, "How much is it?" The nurse replied, "It's 102, sir." Stockbroker returns fire and says, "Sell it when it gets to 103. Kind of giving you that buy, sell, trade type of talk when it comes to stockbrokers and the stock market and kind of how they run day to day and their thought process as they go through their daily work. So thank you guys. And if you have any questions, feel free to come up and ask. It's been a pleasure. Take care.